This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Record run, all-time highs on Wall Street, increased optimism on Main Street, even as the recent hurricanes dent the job market.
Healthy competition, a surprise drug approval sends one stock soaring and one falling. And it may be part of the FDA's plan to try and lower the cost of medicines.
Muni mayhem. Municipal bond investors woke up to a big surprise after President Trump said that Puerto Rico's debt could be wiped out. Those stories and more tonight on Nightly Business Report for this Wednesday, October the 4th. Good evening, everybody. I'm Bill Griffith in tonight for Tyler Matheson, coming to you once again from the New York Stock Exchange. Hi, Sue.
Hi, Bill. Good to see you. I'm Sue Herrera. A record close for stocks. But we begin tonight with the job market and the potentially unprecedented impact that Hurricanes Irma and Harvey could have on the labor market, at least in the short term. Today, we learned that American employers created fewer jobs in September than they had in any single month in nearly a year, primarily because of Hurricanes Harvey and Irma. And as Hampton Pearson reports, the disruptions are expected to show up in the monthly government jobs report as well.
Today's private sector hiring survey is the first indicator of just how much of an impact Hurricanes Harvey and Irma had on the job market last month. Only 135,000 new hires in August, the lowest in nearly a year. Small businesses were hurt the most, losing from 50 to 60,000 jobs, according to payroll processor ADP. Leading economists say Fed Chair Janet Yellen has already indicated monetary policymakers are anticipating the hurricane's impact.
The Fed signaled they already know the data is going to be noisy and they expect some weakness. I think we in consensus are saying, look, roughly the average hurricane since the mid-'80s takes about 50,000 off of employment growth. This one feels like it's a little stronger than average.
Those same economists say construction hiring, on the rebound after 2 months of decline, will accelerate with post-hurricane rebuilding. And they say other key sectors of the economy are in recovery as well. Auto sales were up more than 6% last month, topping 1.5 million, as Americans began replacing destroyed vehicles. New manufacturing data out today shows the service sector of the economy expanding at its fastest pace in more than a decade.
These surveys from the ISM, both the service sector and the manufacturing sector, are also looking forward to after the hurricanes, and were both quite strong.
Market watchers and economists say any setback in job growth from the hurricanes will be temporary and reversible. For Nightly Business Report, I'm Hampton Pearson in Washington.
And as Hampton alluded to there, while job growth may be slowing temporarily, as he said, activity in the services sector last month rose to a 12-year high. The Institute for Supply Management said this morning the surge was driven by increases in both new orders and business activity. The services sector makes up the bulk of our economy and includes everything from healthcare to financial services to construction.
American optimism on the economy is at an all-time high. The third quarter CNBC All-America survey found that a record number of Americans, more than 40%, believe that the economy is excellent or good. The four-quarter average for every major economic metric in the poll, including housing and wages and the stock market, are also at records.
And that optimism is part of the reason why stocks just keep climbing today. As we mentioned, the three major indexes closed at yet another record, and each has now set at least 40 all-time highs this year alone. The Dow itself has set 45. That was today. Up another 20 points to 20,661. The NASDAQ, the S&P both added about 3 points today.
Meantime, Bill, on Capitol Hill, it was the Senate's turn to question the former CEO of Equifax about that data breach, which impacted 145 million Americans. Yesterday, Richard Smith faced questions from a House panel on the company's response to that breach. Today, senators grilled him on another issue, a report that Equifax was awarded a $7 million no-bid contract from the IRS.
It's being reported in the media this morning that you've just received a no-bid contract from the IRS for fraud prevention. Can you explain to the American people not just as consumers who've been exposed and breached here, but as taxpayers, why in the world should you get a no-bid contract right now?
I'm not sure it was a no bid. My understanding, I don't profess to have the details there, Senator. It's with the IRS. It's a contract we've had in the past, I think is being renewed.
You realize to many Americans right now that looks like we're giving Lindsay Lohan the keys to the minibar.
I understand your point.
Under the IRS contract, Equifax will verify taxpayer identities and help prevent fraud for the tax agency.
Last night, we reported that the FCC was considering making millions of dollars available to repair communication networks in Puerto Rico. And today, $77 million was, in fact, approved. The fund provides subsidies to companies that will make communication services more accessible and affordable in places where costs on that island are just so high right now.
And Puerto Rico was bankrupt even before Hurricane Maria hit. After touring the devastation yesterday, the president said the country's mountain of debt would have to be wiped out. That statement sent shockwaves through the nation's $3.8 trillion municipal bond market. Michelle Caruso Cabrera has more.
President Trump visiting Puerto Rico yesterday, surveying the damage from Hurricane Maria. And during his visit, he said this about the island's large debt load.
We have to look at their whole debt structure. You know, they owe a lot of money to your friends on Wall Street, and we're going to have to wipe that out. That's going to have to be, you know, you can say goodbye to that. I don't know if it's Goldman Sachs, but whoever it is, you can wave goodbye to that.
As a result, Puerto Rico's bonds fell sharply in today's market. This is the benchmark bond for Puerto Rico. It got hammered following those comments, falling to as low as 32 cents on the dollar in today's session. When investors think the bond is going to be paid in full, it trades near 100 cents on the dollar. And take a look at companies like AMBAC, MBIA, and Insured Guaranteed. These are all bond insurers. In other words, they issue insurance. If the issuer of the bond doesn't pay, they do. They all took a huge hit because they have large exposures to Puerto Rico. Puerto Rico is struggling with massive debt and the inability to get the power back on in the wake of Hurricane Maria. And what's become clear since the hurricanes, despite borrowing lots and lots and lots of money, the island did not invest in its energy infrastructure. The median plant age in Puerto Rico is 44 years old compared to only 18 years old on the mainland United States. These plants are so old, they have to run on imported oil, many of them. In fact, 47% of Puerto Rico's energy grid is powered by petroleum, which all has to be shipped into the island. That number in the mainland is only 0.6%. As a result, Puerto Ricans spend a lot more per kilowatt hour for their energy, 21 cents versus 11 cents on the mainland in the United States. For Nightly Business Report, I'm Michelle Caruso Cabrera.
And it's not just hedge funds that are invested in Puerto Rican debt. Individual investors also own a lot of muni bonds through mutual funds or directly. So how concerned should you be if you own those bonds? Alexandra Labenthal is a muni bond expert. Her family's been in that business since the 1920s. I knew your grandmother started the business about that time. This is such a complicated story now. The bankruptcy, now the hurricane. They've been negotiating with creditors to try and figure out how much money they're going to get back. How likely, though, is it that the debt can just be wiped out?
You know, I consider this the equivalent of Ford's drop dead to New York City comment, which, of course, was the headline in the Daily News back in the 1970s, except in that case, he had the ability to do something for New York City. In this case, it doesn't make sense. It's not really possible for the federal government to eliminate the debt of a municipality. And you mentioned hedge funds. Let's talk about them for a second, separate from individual investors. Those hedge funds are very savvy investors who have been in the process of suing or negotiating and trying to figure out what they're going to get back on their investments. And by the way, Trump knows extremely well what it's like to deal with bondholders who are savvy bondholders who don't just say, okay, fine, we'll wipe the debt away and call it a day.
Yeah, he's been through that before.
Yeah, he's been through it. It doesn't exactly work out that way.
So, Alexandra, if you're an individual investor and say you have exposure through mutual funds or ETFs of the like, given the fluidity of the situation down there, how concerned should you be?
So that's a really interesting question, because you were showing that graph before of the Puerto Rico 8s. They were already trading at 44 cents on the dollar and went down to 30, and they did rally somewhat today. But if they're already at 44, you're kind of in a bad situation already. Now, the good thing is that there are not individual Puerto Rico municipal bond funds. Puerto Rico bonds are a component of other funds. There are some funds like Oppenheimer, which also is the old Rochester fund, which has a very large percentage relative to other funds. So people have already seen the value of those funds go down.
They're already worried
deal.
about getting the money back anyway because of the bankruptcy.
Right. I mean, it was bad enough. The hurricane made it worse.
Yes.
And what Trump's comments didn't necessarily make the situation worse in terms of getting repaid. It just added on, piled on.
One other sidebar to this, though, Alexandra, are the other municipalities that are in dire straits that are watching very carefully to see how this is handled. I think of the state of Illinois that has had very difficult financial situations for the last year or so. They're watching this very carefully as well, as are their muni bondholders, right?
Yeah, I've said for the last couple of years that every situation that's occurred in municipal bonds, whether it's Detroit or some of the California issuers, Illinois, Chicago, Puerto Rico, was an issue unto itself. Right. And yet you were absolutely right. There is, an effect of, gee, well, what's happening over there? There are always different components. Like in Illinois, you don't have the situation of the aging infrastructure, and those numbers obviously are staggering. You do have the pension situation and financial instability. But yeah, I mean, it does give you an idea, and that did not used to be the case. I mean, you had New York City in the 70s. That was its own experience until Orange County, California, in 94, I think. And then that was its own. And then in the last few years, you have had this kind of tumbling of one situation after another. This is the Puerto Rico situation, though, with the hurricane, obviously. And the important thing there is that the hurricane is stopping, really, the ability of all those bonds to pay interest, because there's no sales tax if people aren't buying things.
There's infrastructure's
no
not paying
electric
it.
power revenues
Exactly.
if there's no electricity. So it's really heartbreaking. It's such a great island, and it really breaks my heart, having been so intimately involved with it and its debt over the years.
It is a very difficult situation. Alexandra, thanks for the thoughts tonight. Alexandra Laberthal joining us tonight. Sue?
Bill, the president today made his way to Las Vegas to visit shooting victims and praise the first responders and the medical teams who responded to the worst mass shooting in this country's history. Jane Wells is covering the story for us.
For the second day in a row, the president came to a place of heartbreak to praise those who had rushed in to help.
Americans dashed into a hail of bullets to rescue total strangers.
He also met privately with victims of Sunday night's massacre, even as investigators continue to process the well-armed lair Stephen Paddock created inside his Las Vegas hotel room, complete with cameras to surveil the hallway. Newly released police body cam video shows what the chaos was like as officers responded Sunday night.
Go that way!
The gunfire lasted 9 to 11 minutes, and when a SWAT team finally broke into Paddock's hotel room an hour later, they found him dead, a suicide. Meantime, his girlfriend returned to the U.S. from the Philippines and was questioned by the FBI in Los Angeles in hopes of finding out a motive, something the Bureau says is eluding them.
This individual in this attack didn't leave the sort of immediately accessible thumbprints that you find on some mass casualty attacks.
Las Vegas probably has more cameras per square foot than any non-governmental place, more surveillance, technology, security. Is it enough? That was top of mind this week at the Global Gaming Expo, a massive tech conference here.
We don't have a thriving industry. We don't have a thriving Las Vegas if people don't feel safe.
Some compare the situation in Vegas to the MGM Grand Hotel fire in 1980, which killed 85 people and led to an overhaul in building and safety codes. Could this shooting lead to a similar sea change? Whatever happens, it will be too late for the 58 murdered victims, including off-duty police officer Charleston Hartfield, who was at the concert Sunday night with his wife. And when the gunfire started, he tried to protect others.
And leaves behind a wife and 2 children. We're very grateful for his sacrifice.
A reminder that while many heroes lived, some did not. For Nightly Business Report, Jane Wells, Las Vegas.
Still ahead, a new roadmap and Ford's decision to move away from traditional cars. European Union regulators are going after two U.S. tech companies. The EU has ordered Amazon to pay nearly $300 million in back taxes. The commissioner also took Ireland to court for failing to collect about $15 billion in taxes from Apple. Authorities are arguing that Apple, like Amazon, profited from a system allowing it to avoid taxes that the EU feels should have been paid.
The FDA wants to speed up the amount of time it takes to get generic versions of complex drugs to market. The theory is that increased competition means lower prices, and the agency is wasting no time. Late last night, it approved Mylan's generic version of Teva's blockbuster multiple sclerosis drug. And look what happened to the stocks. Mylan soared, Teva tumbled. Meg Terrell explains why this could be the first of more drug approvals to come.
The Food and Drug Administration doesn't control the price of drugs, but it does control whether drugs are approved. And that's a key part of the agency's strategy to lower the cost of medicines.
What I think the FDA is trying to do is use market forces in the form of more competition to put pressure on drug prices. Obviously, when things go generic, the prices of the drugs drop.
Late Tuesday, the FDA approved a generic version of a multi-billion-dollar drug for multiple sclerosis. The medicine is Copaxone, made by Israeli drug maker Teva Pharmaceutical. The newly approved generic version is from Mylan. The medicine is considered a complex generic, one that's harder to copy under traditional approaches. And Mylan had been delayed several times at the FDA, making last night's approval a surprise.
One of the bottlenecks at the FDA were the so-called complex generics, which are hard to make or have some unusual tweak to them that are different than your typical white solid pill.
Analysts estimate Mylan could price the generic at a 40% discount to branded Copaxone, now priced at $80,000 to $90,000 a year. They say it could capture as much as 45% of the market. The news drove Mylan's stock higher. For Teva, it was the opposite story. Copaxone accounted for almost 20% of its $22 billion in 2016 revenue. With the new competition, Teva said today it expects its fourth quarter earnings per share will be reduced by 25 cents. The stock sank. Mylan's approval came just 2 days after the FDA issued new guidance for approvals of complex generic drugs. And analysts say more approvals could be on the horizon, including for generic copies of GlaxoSmithKline's asthma drug Advair and Mylan's EpiPen, itself the subject of scrutiny over its price.
All of the big troublemakers that we've read about in the news have probably been in this area.
In a blog post this week, FDA Commissioner Dr. Scott Gottlieb said the agency plans to introduce additional policies to bring more competition and lower prices to the drug market, promising, quote, "We're just getting started." For Nightly Business Report, I'm Meg Terrell.
Frito-Lay helps lift the bottom line at Pepsi, and that's where we begin tonight's Market Focus. The food giant reported a better-than-expected profit thanks to, in part, to selling more snacks. But weakness in its North American beverage business caused overall sales to disappoint. The chief financial officer of the company says it focused too much of its marketing efforts on newer products, and it will fix that mistake.
We really had a strong pipeline of innovation this year, and we probably just moved too many resources from our core businesses of Pepsi and Dew into these new products. And frankly, that cost us competitively for the quarter. So we'll need to balance that out a little bit better over the next couple of quarters.
Pepsi shares finished up 21 cents today to $109.34. Office Depot is buying IT provider CompuCon for $1 billion. That move is part of Office Depot's plan to transition from a traditional office supply retailer to a broader business services and technology provider. The company also said it was cutting its guidance for 2017 due to hurricane disruptions. Office Depot's shares were off almost 18% to $3.78.
Shares of GoPro got crushed today after Google unveiled its new clip-on camera, which could rival GoPro's products. And they did it at a cheaper price. Google's new device will retail for about $250 compared to $500 for GoPro's newest model. GoPro shares were off 6% to $10.39. And after the bell, Bloomberg reported that SeaWorld is reportedly being approached by England-based theme park operator Merlin about a potential merger. SeaWorld is said to be discussing a possible sale with advisors, and Merlin is not the only potential buyer. Shares initially rose in after-hours trading and also ended the regular session up 4% to $14.11.
As we reported last night, Ford is shifting gears, mapping out a new strategy for staying competitive in a rapidly changing automotive business. The automaker says it will now focus more on trucks, SUVs, and electric vehicles. Phil LeBeau has our story for us tonight.
The Blue Oval is getting a makeover. New CEO Jim Hackett repositioning Ford to compete in a world where electric, connected, and autonomous drive vehicles will change how we get around.
The mandate here is that Ford must compete. Companies never choose to die, and yet many, by not evolving, are enabling that kind of fate.
While Ford invests in future vehicles, it's slashing costs by $14 billion. At the same time, it will push more trucks and SUVs, the most popular vehicles it sells, while cutting back on cars, which are far less profitable. But the biggest change is Ford investing heavily in self-driving and electric vehicles. That's because Ford needs to compete in China, the world's largest auto market, where the government is aggressively pushing its residents to plug in their cars.
They've got to focus on the now with cutting costs and producing more SUVs because those are popular all over the world. But they've also got to be investing in the future technologies like electric vehicles, like connectivity in cars. And that's not going to pay off for a while.
Ford's chairman, Bill Ford, hired Hackett to shake up the automaker. But he knows shifting gears at a company that's built cars and trucks for a century will take time. Still, Hackett knows he's on the clock.
I want to declare to you that I get up every day feeling like time could be wasted here if we don't get moving. So I feel a real sense of urgency.
Ford investors also feel a sense of urgency. Their shares have lagged other automakers and the market as a whole over the last couple of years. Phil LeBeau, Nightly Business Report, Chicago.
Coming up, will malls have to look a lot less like malls to keep shoppers coming in this holiday season?
Consumers are expected to spend more this holiday season. According to a recent forecast from the National Retail Federation, sales may increase as much as 4% compared to last year. That's important because the holiday season, of course, can account for 20 to 40% of annual sales for many retailers. But with stores closing and foot traffic in decline, how are the nation's malls holding up as we head into this important holiday season? Courtney Reagan is in Los Angeles for us tonight.
So far this year, at least 20 retailers have filed for bankruptcy and more than 6,100 stores are closing. But that doesn't mean the mall is dead. In fact, most malls are holding up okay. They're just changing, investing a lot of money to keep up with the shifting consumer. This Westfield Century City Mall in Los Angeles just got a $1 billion makeover and expansion. Because of the variety of stores, location, appeal, and sales, it's one of the highest rated malls in the country. And there are more restaurant and specialty food options here than there are clothing stores. There are fitness clubs, lots of stores that cater to health and beauty, a Tesla showroom, Apple store, Amazon books, and much more.
A lot of the malls in the country and a lot of the physical assets are aging. And you do need to upgrade the mall, you do need to have the best retailers. And every 20 years or so you need to spend that kind of capital to remake the mall. And here at Century City, I believe we have the mall of the 21st century in what used to be the city of the 20th century. The idea is to keep the customer coming back, give the customer something that they like to do and not just come to shop, but come to a place where they want to be. They want to relax, they want to meet their friends, they want to create their own physical social networks.
At a recent event in New York City, mall owners and operators spoke about the state of the mall today and how it's changing.
The business is detoxing, and we're replacing the weak with the stronger. And as a result, we'll be stronger when we're done.
We're expanding. We're doing cosmetics and wellness and fitness and service and value and food and beverage and entertainment, and all these other types of categories are coming into our properties.
Revamped malls will be put to the test with Black Friday less than 2 months away, as online shopping is expected to break new records this holiday season. Shopping center manager JLL, CEO of America's Retail, says the changing mall tenants will help lift holiday sales, but the broader economic picture will act as Santa's helper, too.
This is going to be one of the best holiday seasons for sales that we've had in the last 4 to 5 years. I think consumer confidence is at an all-time high. When consumer confidence is high and people feel good about themselves, that affects retail sales.
As mall owners shift away from clothing and more toward experiences and services, many malls are starting to look, well, a lot less like malls, hoping that's what keeps shoppers coming. For Nightly Business Report, I'm Courtney Reagan in Los Angeles, California.
And that does it for us tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Bill Griffith. Have a great evening. We'll see you tomorrow.